Hello, my name is Joe Lenz, and welcome to this episode of Market Matters from Century 21 Discovery. We're located at 1440 North Harbor Boulevard, Suite 225, in the world-famous Fullerton Towers. Come in and visit with us, and we can help you achieve your real estate goals. Today, I am with Ryan World with World Mortgage Group, and he met with us a couple of months ago, and what we talked about were rates and strategy and those items. And rates have come down a little bit, Ryan, since we last met.
Absolutely.
Where are they at and what's going on in the market?
Yeah, interest rates have definitely come down. For FHA loans, we're probably looking in the low sixes, conventional maybe mid sixes, high balance loans probably a little bit higher than that. The Fed should be lowering interest rates next month, and we don't know if it's going to be 25 basis points or 50 yet. There's a good chance at 50, but we will see what happens. If that does happen, interest rates should go down, and they will continue to go down, hopefully over the course of the next couple of months.
When you talk basis points, what do you mean by that? It's like 25,
Yeah,
50?
50 basis points is equivalent to 0.5%.
Okay.
So basis points are on a percentage basis, essentially.
So it's just a fancy word for
It's fancy.
half a percent. Got it.
Absolutely.
So is now an opportunity to refinance. Or what do you think about that?
Absolutely. So anytime interest rates are on the downtrend, definitely makes sense to look at possibly refinancing your loan. What we're going to weigh is your monthly savings versus how much it costs to refinance and find that break-even point on when it's going to make financial sense to do so. On a downtrending interest rate market, it definitely makes sense to look at a lower closing costs, possibly higher than market rate refinance, so that you're paying as little as possible and you're catching interest rates as they continue to go down, so you're not losing the closing costs essentially and the fees. So we'll weigh that and figure out what your break-even point is and see if it makes sense for you to refi.
You know what you're talking about, man.
I do sometimes.
So we talk about pre-qualification versus pre-approval. What's the difference between those two items?
Absolutely. So on one hand, like I said, pre-qualification, pre-approval. Pre-qualification is just a verbal conversation with you as the buyer. I'm not a huge fan of it because it doesn't totally give me everything that I need to figure out how high of a sales price you qualify for, what loan programs you qualify for. It's just you telling me what you think you make and what we would use to qualify you. On the other hand, pre-approval, much stronger, especially when you're ready to make offers on properties. I run a credit report, I look at your income documents, I look at your asset documents, and then we sit down and we go over, okay, you qualify for all of these loan programs because I have all of your information. This is all accurate stuff. And then you can go out, look at the property, and make your offers with confidence that you actually do qualify for that.
So good points. Now for buyer strategy, is there a seller preference? When you're the buyer and you got a seller and, the sellers want to see something and they want to make sure you can really buy their home when you've got 2 or 3 offers or more that you're competing with. What, as a buyer strategy and working with a realtor,
So that's a great question. So on the pre-qualification side, I have nothing to show the listing agent or the listing agent's potential cross-qualifying lender. So I have nothing to promote you as a buyer for being able to purchase that house. If I have the pre-approval, I can send stuff in a cross-qualification packet the other lender can sign off, and the seller is very, very happy and thinks it's a much stronger offer than somebody who hasn't been pre-approved.
Okay, good information. Have we missed anything along the way?
Just if you're thinking about purchasing a house anytime in the next year, get a hold of somebody at Century 21 Discovery. They'll get you in touch with me as well. I'll have a 10-minute conversation with you, get you pre-approved, even if you're thinking a year down the road. It makes sense to do things now so you know where you stand. I can set you up for a plan to get to where you need to be if you're not already there, or hey, you might actually qualify a lot higher than you thought you would right now and you are ready to purchase.
It's interesting that you say that because we've worked with plenty buyers who qualify for more than what they budgeted.
Yeah.
And then they have a choice. Do they stick within their budget, what they wanted to do, or do they make that stretch what they can qualify for? And that's a personal decision based on the buyer. And I think that is information that when you have that, it really gives you, comfort
Absolutely.
and sleeping comfort as well.
Absolutely. And with interest rates projected to go down, hopefully whatever you end up purchasing the property for right now, hopefully that's going to be your highest payment you're ever going to pay, because hopefully you can refinance to a lower rate down or in the future and you're saving more by doing so.
So we hire the right realtor for you, and you're the one who makes that hire. And you can notice that Century 21 Discovery, we talk about strategy a lot. And in strategy for you, the buyer, what is your buying strategy? And we can help you formulate that and come up with a plan. And our job is to really, take your goals and help you turn those into reality and inspire you and embrace that for you. So with that, I want to thank you for joining us today. Hope you're doing well. And if you ever need anything, give us a call, 714-626-2000. Century 21 Discovery is the broker of choice. Thanks for joining us. Ryan, thank you very much. We
Thanks
appreciate it.
Appreciate
Have a great day. Charge
Charge
on.
on.